Welcome to the Real Assets, Real Leaders podcast, a show where we meet with leaders from across the energy, infrastructure and real asset space to talk through their careers, their motivation and their leadership ethos. My name is Joshua Fowkes, founder of Sondra Metric Executive Search. I hope you enjoy the show. Well, welcome to this week's episode of the Real Assets, Real Leaders podcast. Today, we're delighted to be joined by Dan Wells, partner at Foresight Group. Dan, thank you very much for joining us. I appreciate it.
Thank you, Josh. It's great to be here.
Great. Would you, just for the sake of the audience, Dan, just give a short intro to who you are and what you do?
Yeah, absolutely. So I'm a partner at Foresight Group. Foresight Group is an alternative investment management firm. We manage about £12 billion worth of assets. And the majority of what we do is to invest into infrastructure and real assets in two main themes, one of which is the energy transition, so decarbonising our power systems and our broader energy systems. And the second theme is what we call natural capital, which essentially is investing into restoring nature and ecosystems. And my particular role at Foresight is to co-manage our energy transition fund. And my background is that I've worked in sustainable infrastructure and real assets investing for pretty much my whole career in various places around the world.
Great. No, that's great. Thanks for the intro. So what I wanted to do, Dan, is just to start off and just dig in a little bit more into the work that you're doing with your team at Foresight before going back and talking a bit more through your career as well. So yeah, let's start with today, where you are at Foresight. Do you want to just flesh out a little bit more about your role, some of the things that you're involved in on a day-to-day basis and the big focus at the moment?
Yeah, absolutely. So we do a few things as a firm. We have separate to our infrastructure and our real assets team. We have a private equity team who invest in UK businesses, essentially, just focus on the UK. We have a venture capital team who invest in new cutting edge technologies. We have a listed equities team. And those parts of the business represent around 20% of what we do. And the other 80% in terms of AUM is our infrastructure and real assets team. So within that, we manage different types of funds. We have private funds, listed funds. We have some retail funds raised from UK retail investors. And my particular role is to manage our main private markets energy transition fund, which is called Foresight Energy Infrastructure Partners, or FEEP. We're on to the second vintage of that particular fund now. And so really what we in the team do is we obviously raise capital from institutional investors. We put that capital to work in long-term investments within the power system that contribute to net zero targets, contribute to decarbonisation. And we have people in the team from different backgrounds. We have investment people, we have portfolio people, so engineers that look after the assets on a hands-on basis. We have sustainability professionals who make sure that what we do is inherently hopefully good, but also we need to think about how we go about things, how we interact with local communities, for example, how we hold ourselves to account. So all in all, the team has got a big and varied skill set, but it's all about working towards this common goal really of essentially mobilizing capital into this big theme of the energy transition, and separately through some of my colleagues mobilizing capital into nature restoration.
Yeah, and you mentioned FEEP 1, you mentioned FEEP 2. Obviously, FEEP 1 fully invested, wildly successful as well in terms of fundraising, and onto FEEP 2, onto the second vintage now. Would you maybe give us the elevator pitch for FEEP and how you view that and how you present that?
Yeah, absolutely. And I definitely like the description wildly successful on fundraising, so I might use that. So the elevator pitch there is that really the FEEP funds are designed for infrastructure investing in what we call the kind of mid-energy transition. So essentially where we are now. But we designed the fund quite a few years ago. So we started thinking about it probably in about 2016, 2017. And at that point, the market was going through a bit of an inflection point. So by that point, Foresight itself as a firm had established itself as something of a leader in clean energy investing. We built a track record in investing in wind and solar and bioenergy. And in 2016, we made our first battery storage investment. But around that time was about the time that renewable energy started to become cost competitive. So the costs of wind and solar had come down to a point where it was starting to actually outcompete fossil fuels. And that was but that was still in what you might call the early energy transition, when essentially renewable power, although lots of it was being added to the grid, it still represented maybe 0 to 20% of actual power being generated on the grid. And at that point, to be honest, investing in renewable energy was quite straightforward. It had become an established asset class. Institutional investors, pension funds, like wind and solar projects, they're very simple. You can look at those assets almost in isolation. So if you take an example of investing in a solar farm in Italy, at the time you could look at that almost as if it were like a quasi fixed income investment. You could look at that asset in isolation. It would probably have a long-term subsidy contract in place, and it's quite straightforward. Whereas if you jump forward to today, where we are now in what you might call the mid-energy transition, when renewables represent 40, 50, 60% of power coming to the grid, it's a much more complicated world, because as an investor, you need to understand, if you're investing in that Italian solar park now, you need to understand what's happening with the build-out rate of solar itself. You need to understand what's happening with batteries, with electric vehicle charging, with interconnection of different systems. So you need to kind of see the system as a whole. And obviously the system now needs to be planned as a whole, because you can't just keep putting more renewable energy onto the system. It's a more complex world, but it creates opportunities. We can now build more diversified portfolios of not just investing in the generation assets, but the enabling infrastructure, the energy storage, the grid itself. So we saw opportunities then to actually build more consciously constructed portfolios, to manage risk better. But we also felt that looking forward to where we are today, to reach deeper levels of decarbonisation, particular forms of infrastructure would become increasingly important. Things like long duration energy storage. So we need more long duration storage as well as short duration storage, investments into the grid itself. And it was actually, and as of now, it's the physical constraints of the energy system itself that are holding back the energy transition. We've got a great policy environment, we've got great market forces. So that's really the pitch to FEEP, is that it's an energy infrastructure investment fund designed for the mid-energy transition, and it goes beyond just investing in the renewables and looking at these other areas and building portfolios of assets that we think make sense in this complex world.
Absolutely. And I mean, obviously it was a good pitch, because FEEP1 oversubscribes it by 70%. Did I read that right?
Yeah, that's right. So FEEP1, we had a first closing in 2020. We ended up finishing the fundraise in September 2021. The fund itself was about 850 million euros, which, as you say, Josh, was 70% over the target. It took a lot of work to get there. It was a lot of work talking with investors, building our credibility as a manager. Obviously, with private markets funds, investors are locking up their capital for up to 10 years. So it's a big decision to put their trust in you. So I wouldn't say it was easy. We were on the road for a couple of years before 2020, kind of building that education piece and explaining why this is a differentiated strategy, why it was not just investing in kind of pure play renewables. But we now have a brilliant investor base that we're very proud of. The Fund 1 investors are some of Europe's leading institutional investors, groups like the European Investment Bank. We have a dozen or so Nordic institutions. They are very focused on kind of sustainability. Some of the UK's largest pension funds. And so it's a great investor base. And then we've been building on that now with the fundraise of the second vintage of the fund, where we had a first closing of that fund back in June last year. With new investors coming in, we had groups like the Irish Sovereign Wealth Fund, ISIF, Border to Coast, which again is another one of the UK's largest pension funds coming in. So I think building a business in this space is all about kind of inch by inch, just demonstrating your credibility and building that trust with institutional investors.
Yeah, and I think your credibility, you highlight there, is the key word, isn't it? And one of the features, I guess, of what you did with FEEP1 is that you deployed that capital across, I think it was 9 different countries, was it? And I think as we'll go into later, Dan, this seems to be, a theme throughout your career of working across different jurisdictions, different kind of cultures, different regulatory environments. I guess particularly looking at FEEP1, what were some of the lessons and the observations that you were able to make in deploying capital across all of those different countries?
Yeah, it's a really good question. So I think there's definitely a couple of lessons learned. The first lesson was quite straightforward, which is just the importance of having the discipline on the kind of contract side of things to do your work. Obviously, for infrastructure investors, that is very much your core skill set, is to make sure that the contracts are solid, and that's more the case for infrastructure investing than private equity investing, which is a bit more about the kind of the people element of things. But for infrastructure, you have to have the contracts right. And that became evident as we rolled kind of through 2020, 2021, and we were building big, complex construction projects through COVID. We had delays on some assets because of supply chain issues, and we were kept whole because of the contractual protections we had. So that was the first lesson was, well, that's super important. But there was a second lesson actually we learned, which is you have to think beyond the contracts and the spreadsheets, and you've got to think you do even as infrastructure investors have to think about people, and in particular, actually the importance of local communities in which you operate. And just to give you one example, the very first investment we made in FEEP 1 is in a wind farm called Skarfdorsen, which is in the middle of Sweden, near a town called Sveg. When we built it out in this time period, we were using a new model of Siemens turbines, which is their 5X platform. And these are 6.6 megawatt turbines, which are some of the largest onshore turbines in the world. And it's the first time they've been deployed. And so, unsurprisingly, there were some teething challenges. We had delays because of COVID. And really, it's only afterwards we realised how crucial the continued support of the community was. We needed extensions to building permits. We needed the community buy-in. What we found out afterwards was that actually particular individuals in the community, like, for example, the owner of the local hotel, were instrumental in galvanizing support for the project. The project itself created employment at a time when this local town, Sveg, which is heavily tourist dependent, was in a really difficult period because of COVID. And the hairdressers, the restaurants were kept going because of basically employment created through the wind farm. The wind farm also creates payments, has like many renewable energy assets gives community payments. And it's been amazing to see what the community has done with those with that income stream. There have been local businesses that have been founded. There's a fantastic one called Vintage Volts, which basically takes old petrol cars, things like old Defenders, Land Rover Defenders, and converts them to electric cars.
Wow.
So it's amazing to see that impact it's having. And when we spoke with the hotel manager, he was very emotional about the impact that the project had had. And so I think that's another lesson, is that these investments, particularly clean energy investments and nature investments, they operate the existing communities, and you need that community support. And I do think that that's going to be one of the crucial things for net zero as a whole, actually, is the local politics of things and support for or objections to renewable energy.
I think it's one of the things that I think the industry in general can maybe do better, is to actually highlight some of those case studies in a more engaging way. You read the news, and you pick up local articles, and maybe it's the bias of the media, but a lot of what you see is kind of negative public reaction towards projects. But in reality, as you highlighted there's so much really good positive work that goes on, that I think if maybe we turned up the dial a little bit on highlighting that, and maybe spotlighting, like, for example, the individual that you mentioned there, people can actually see this can be a really transformative thing, which isn't just good for the environment and kind of the electricity system, but also good for people as well. So yeah, no, I think that's really, really good to hear. And with FEEP 2, obviously you've learned all of those lessons. You're now in a slightly different stage where you're both fundraising, but you're also deploying capital as well. Talk me through how you're managing that, and I guess the balancing act, in the sense that you have to go through as an organization.
Yeah, that's right. It is a balancing act. So myself being one of the co-managers on the fund, the other manager is Richard Thompson, another partner in the team. We obviously have a big responsibility in terms of making good investments from Fund 2, and that's our main focus right now. Is is thinking about how we take this approach, so the approach I talked about in terms of building conscious portfolios, looking for assets that have scarcity value because they'll be really crucial for kind of deep decarbonisation, how we evolve that strategy. We're probably now, and we invest across these three areas of assets that generate power, so renewables themselves, storage and grid. For Fund 2, we're probably going to be a bit more focused on storage and grid, just because there is now even more understanding of the role and importance of those assets have for decarbonisation of power. So we think we'll end up possibly with a slightly more balanced portfolio, whereas Fund 1 was more skewed towards the renewables. But in terms of how we balance things, the most important thing is to build the right team and to have clarity so that people know what they're doing. And we have an investment team, and obviously we have a team who are focused on the fundraising element of things. And so we, the fund managers, can focus on what we should be doing, which is making good investment decisions. We obviously participate in the fundraising process because investors want to speak with us,
of course,
directly. They want to see who's going to be managing their capital. So it is quite labour intensive in terms of like the time allocation for us on the fundraising side of things. But the main thing is to make sure that we've got an absolutely best in class team on the investment side, which we have and which we built over time, alongside that kind of the machine that's working through the fundraising process.
Yeah, and absolutely. And like I say, people working with good people is a key element of ensuring that you're able to do that. So you mentioned, obviously, you guess your slight shift in focus away from purely generating assets. I say purely, obviously you invested in those three areas, but you're looking more towards storage, more towards grid infrastructure. I imagine, as you say, that's probably a response to what you're seeing in terms of need in the market. So I'm curious, how do you see the market evolving from, I guess, firstly from a kind of a technology need perspective?
Yeah, so I think from a technology perspective, my take on it would be we have all the technology we need to get to net zero. Where new technology can play a role will be in terms of getting us there faster and cheaper. So, but the main focus is on deployment of what we already have. I think the most fundamental thing to understand, which is quite straightforward, but it's really profound, is that for now, quite a few years, wind and solar power have been the cheapest form of energy globally. And that fact just keeps compounding over time. And that really does have profound implications for not just energy, but kind of beyond energy. It means that from an energy systems perspective, everything that's being deployed now, pretty much everything that's being added that is new, is renewable energy. You can look at interconnection queues, even in the US, over the next few years, and the vast majority of what's going to be added is wind or solar power. And that's simply because it has the cheapest globalized levelized cost of energy. Renewables are quicker to build. They don't produce localized pollutants. And then they obviously have a role to play in terms of where we are now in the world and looking and where governments need to think about resilient energy systems when they're not reliant on other powers for fossil fuel supplies. So I do think that in terms of where the market is right now, the main point is about just deploying huge amounts of wind and solar. You look at the UK as an example. The Clean Power Action Plan is hugely ambitious in terms of what it's looking to achieve over the next 5 years or so. Probably entailing scaling up wind, solar, and batteries by about 2.5 times from what they currently are, and they already have been deployed at scale. So that's a huge undertaking. The government is clearly focused on where the pinch points are, so focusing on things like streamlining the planning process, the permitting, and I do think the UK for a long time has also then recognised that you're not going to get there just by deploying renewables. You need the build outs of these other areas, so storage and grid. So that's where we are in the market right now, is that there is a recognition for the role that these other forms of infrastructure will play. And I'll just briefly talk about long duration storage as an example of this.
Please do.
I have to say, kind of as someone who is personally motivated on climate and the environment, I would definitely advocate people learning about long duration storage. I think it's one of the crucial technologies that will play a role, not just in decarbonisation of power, but in terms of like meeting our overall sustainability objectives. The reason for that is that now as we have more wind and solar being added to the system, we obviously have more variable power. The cost of batteries keeps coming down, and batteries are extremely useful for more short duration applications, so keeping the grid in balance on a second by second basis, providing a few hours, maybe up to 4 hours or so of kind of time shifting of energy or backup power. But as we reach these deeper levels of decarbonisation, we need energy storage in durations of beyond 8 hours now. And that's where actually technologies like pumped hydro is still the most effective technology. We have in the Fund 1 portfolio, we're developing a project in Scotland, a pumped hydro project, the Glenmuckloch project, which is about 45 minutes south of Glasgow. And if you go to that area, it's a really good illustration of the kind of some of the progress and challenges of net zero. If you drive around, you see wind turbines everywhere. There's been a huge build out of wind in southern Scotland. It creates issues for National Grid. National Grid have to curtail large amounts of wind power when there's excess wind. National Grid will have to build more connections between Scotland and England, where there's more, where the demand for the power is. And by siting a long duration storage asset in somewhere like that, it means that National Grid don't have to spend so much on transmission infrastructure. They don't have to curtail wind so much. So it's a really strategic investment from a system planning point of view. And therefore, we think these assets will have real strategic value. So I feel that's kind of generally where we are with the market. Future, kind of looking to the future, yes, there will be new technologies will play a role. We'll see new battery technologies, possibly solid state batteries, making a huge difference in terms of just increasing duration, energy density of storage. Nuclear fusion, interesting to see what impact AI will have. So AI coupled with nuclear fusion development might start to speed up the learning circles. At some point, that will start to play a significant role. But this is very much looking to the future. Yeah. Right now, it's all about deployment of existing technologies.
Sure. And obviously, Foresight, you mentioned 2016 was your first battery investment. So you're you're one of the earliest movers in the market. So obviously, you're in a really good place to make a judgment on how that's progressed. I think it would be remiss of us, although I think as we've said, these things can date quite quickly, if we didn't at least mention potential economic risk. Obviously, as we're speaking at the moment, everybody's trying to figure out the impact of tariffs, potential trade deals. So I'm not going to ask you to commit on anything which will date particularly badly. But interesting just to get your perspective on how that could affect energy markets.
Yeah, definitely. So I think here again, it's about looking to the kind of the deeper currents that underlie here, not yes. There's obviously a huge amount of noise and there's a lot of volatility at the minute. As we're talking here in early April 2025, tariffs are obviously the discussion point at this particular moment in time, and we have obviously moved into a world of pulling back from the general consensus around free trade. And that's been going on for some time. I mean, there have been tariffs in various shapes and forms, not just in the US, but in the EU being put in place. That will add inflationary pressures just across the board. So there is at the minute, there is a lot of press on how these market forces, these economic forces will hold back the energy transition. Now, I think the kind of the points to make here is that first of all, these any inflationary pressures coming through from tariffs will affect everything, and that will include, for instance, building new fossil fuel plant. So the cost of drilling rigs has gone up significantly. The fossil fuel kind of world itself, which obviously has been fantastic and has built the world we currently have, and we should all be very grateful for that, uses something like 100 times the amount of material mass that the equivalent renewables do in terms of delivering the same amount of power. That's a stat from a group called Ember Energy, who do some really good research on this. So the point being that, yes, wherever we land in terms of like how generalized global costs will increase, yes, that will potentially to some extent increase the investment cost of renewables, but the all-in levelized cost of renewables is way cheaper than the fossil fuel alternative. And right now, if you're any kind of investor looking to put long-term capital to work, are you really going to underwrite, let's say, a gas-fired power plant, which might on the surface of it have a nice high double-digit return, but that relies on that return being met in 20 years' time, in 30 years' time. And what's the world going to look like then as we move deeper into decarbonisation? And are you really going to take that risk on the fossil fuel kind of supply? So I do think that underlying everything, the market forces driving forward the energy transition are pretty inexorable. China recognized this 15 years ago. And we're moving to a world where what you might call kind of electrotech, so everything from wind power, solar power, EVs, heat pumps, batteries, that's technology. And it just keeps coming down in cost, whereas fossil fuel infrastructure doesn't, because that's a fuel-based kind of system. So I think I do think it's all at the minute. Really, people should be focusing on the underlying forces driving things.
Yeah, that's really helpful, and obviously the demand for power with AI infrastructure increasing exponentially, obviously just really increased the spotlight on that need. So I'm sure we'll see a lot more capital coming into the arenas that we want them to. What I want to do then, Dan, thanks for giving us that overview of what you're currently doing. I wanted to take a bit of a deep dive into your career. So going way back to maybe the early years of you starting out. I'd love just to get a bit of an overview. And I guess the first thing I wanted to say is that your background is in history, isn't it? Rather than maybe going and doing a finance degree, for example. And I think from my perspective, seeing the way that you write about the kind of industry and some of the things close to your heart, which we'll talk about shortly, I think that comes through. But do you want to talk a little bit about that, about kind of not starting maybe out in that traditional finance and what that transition into the finance industry look like?
Yeah, absolutely. I think we're very fortunate in the UK to live in a system where you can study basically anything at university and then go and work in an area like finance. That's not always the case in other countries. You kind of have to study finance at university or at college. I think I studied history because I enjoyed it. It was something I did and I still find fascinating. I think subjects like that, art subjects, written kind of essay-based subjects are great, obviously in refining your written skills, which I still think are extremely important for anyone in any line of business. It helps you develop arguments. It helps you see issues in their kind of multi-dimensional form and look at them from different sides. So it helps you have that skill, that muscle memory of being able to construct an initial argument and then a counter argument and come to a conclusion. So I think it's a great basis for anyone to be working from. History is also great because obviously it helps you it shines a light on any situation in the world. You've got some appreciation of kind of the deep undercurrents that have got there. And although we live in this world that seems to change by the minute right now, what we're seeing is still, it's all kind of echoes of the past. It's all functions of what's happened historically. So I definitely would recommend it for anyone in terms of just giving them a broad base for understanding the world. But yeah, it was certainly quite a leap then, kind of moving into finance for the first time.
Sure. And talk me through that then. So you finished university and then you actually started off working for EY?
That's right. I did. I took that route in all honesty because I thought it would be a good kind of grounding point into business and finance. I had no idea about finance or economics at the time. I'd never really studied it, to be honest. Although history, actually, you do need some appreciation of economics to sort of understand the basic sort of the drivers of history. So I worked for EY for 3 years. I did my chartered accountancy qualification. I moved into our corporate finance department, so the kind of team that advise businesses around M&A activity. I was specifically focused on valuing businesses. And then I had something of a very early midlife crisis in that I decided to leave EY and to go and work in advertising, which sounds a bit kind of counterintuitive. I had friends in advertising. My dad had worked in that world. It was a great fun world. I knew that. And they had cool offices. And I had a feeling that I could use my finance skills in branding. So to do kind of things like brand valuations. That was my theory. I went to work for one of the big agencies. amazing, fantastic, shiny offices over in Knightsbridge. And by 10 a.m. on Monday, the first day there, I realised it wasn't for me. I realised I just didn't want to spend my career selling cat food and other consumer goods. It just wasn't what I wanted to do. And with hindsight, that was one of my really lucky breaks, because although that was a difficult moment, it gave me 6 months to basically think about what I wanted to do. And that's when I thought, well, I do want to do something with purpose. I do want to contribute to something bigger. The environment and climate in particular was something I did feel motivated to work on. And so I ended up going back to EY, and the firm kindly sponsored me through a part-time degree in sustainability, which is a fantastic course that I did at a place called CSEM, the Centre for Sustainable Environmental Management, a spin out from Oxford, that essentially focused on kind of Earth systems and how environmental systems interact with human systems, and gave me some understanding of the kind of multi-dimensional nature of what sustainability means. And I was doing that whilst then working, obviously, at EY, but now focused on advising governments and corporate clients on what was called alternative energy at the time, so wind and solar. I worked on things like early carbon capture projects, the next phase of the UK's nuclear programme that was being worked on at the time. And that was a fantastic experience, where I spent the next 4 years essentially kind of getting a grounding in sustainability and working in those markets which were very embryonic at the time.
I hope you're enjoying this week's instalment. This podcast is brought to you by Sonder & Metric, an executive search firm facilitating leadership appointments across the energy, infrastructure and real asset space. If you're looking to attract top-tier leaders to drive your value creation strategy and realise your growth plans, Sonder & Metric's proven search strategy guarantee exceptional results, all whilst reducing the risk associated with leadership hiring. For more information, visit our website www.sonderandmetric.com. Just to go back to that decision to, I guess, take a leap and to go into advertising, it sounds like it's something that you don't regret. And I think one of the narratives which I see pushed quite a lot, maybe for people a bit earlier on in the career, is that you have to make the right choices. If you don't make choice A, B, and C, you'll never get to where you want to be. You can't afford to make a mistake in your career. But obviously, you made a move, which you say, 10 o'clock Monday morning, I shouldn't be here. But it sounds like you don't regret it.
No, I don't regret it. I think I was very fortunate to have it. I do think that sometimes as people, we only learn through pain, basically. And so you do need to have something like that to kind of shock your system. I think otherwise I would have sort of coasted along and might not be now in a place where I feel like I'm sort of hopefully contributing something beyond just a kind of regular job. So yeah, I do feel that's the case. I do feel like when I speak to people who I view as being successful, in many cases they have learnt through adversity, and they've tried things and they failed and they've kept going, and that obviously speaks to the value of perseverance as well.
Yeah, absolutely. So you end up back in EY, you move into sustainability, and you get involved in some really interesting kind of early stage projects, many of which now are very much part of the fabric of the UK energy mix. And then you move on from EY. What happens after that?
Yeah, so I had a brilliant time at EY. I have to feel personally, probably I'm someone who's slightly better suited to working in smaller teams and not such a corporate environment. And I was just very lucky to have an opportunity then. I met a team of people who had recently spun out of, this was now in 2007, they had just spun out of Nomura, the Japanese bank. A team of people led by Assad Razouk, who is very senior at Nomura and is now a very big kind of personality within climate and sustainability. A bit incongruous that you had obviously ex-investment bankers who were basically seeing the opportunity in climate and energy. But around this time, this is when we had the first kind of wave of interest and actually capital being allocated to climate in a serious way, and in particular through essentially the carbon markets. So in 2005, the Kyoto Protocol was fully ratified. Around that time, Al Gore was was doing his thing with An Inconvenient Truth. By 2007, 2008, there was real political support in the US for doing things, and this obviously seems quite amazing now, but there was to some extent bipartisan support for things. There was a cap and trade bill that almost went through Congress in the early stages of the Obama administration. So I met Assad. There were other kind of leaders there. There's a guy called Richard Wilkinson, who's a great friend and a mentor of mine, who had also come from Nomura, and they were building this business. So I joined them, a small team. The business was focused on raising capital to invest into clean energy and sustainable natural resource projects. So all of a sudden, I went from obviously a kind of UK corporate world to a much more international setting in a smaller team, but at an extraordinary time. So in 2007 and 2008, we spent a lot of time in the US raising capital. We raised equity for the company itself, so what we call GP capital, so capital for the general partner, corporate capital from a number of groups, such as some of the investment banks. We raised some money from CVCI, the venture arm of Citigroup, various other institutions, and we then raised an institutional fund from US institutional investors, primarily endowments and foundations, the university endowment funds. And that fundraising process was extraordinary for me. Obviously, going around the world, also raised capital in the Middle East, learning how to raise capital, learning how these private equity style funds, which are called limited partnership or LP funds, how they kind of work, how institutional investors think. The context of this was 2007 and 2008. The global financial crisis was kind of kicking in. We were very lucky with timing. I think we closed the fund. We sort of signed the documentation pretty much the same weekend in September 2008 that Lehman Brothers went down. So it was lucky. Wow. It was lucky timing. And then we had a fund to invest, and we invested it into Asia. So my next step was to relocate to Singapore to work on that.
Wow. So again, a very different experience for you. I guess, early on in your career, you've worked in the UK, and then you move out to invest in some really interesting markets. And again, probably an element of a cultural shift in dealing with different cultures, different people, and obviously you will have been looking at some really interesting projects out there as well. So do you want to maybe just shed a bit more light on what projects were you involved in? Where were you doing them? What were some of the challenges?
Yeah, absolutely. It definitely was a huge shift. By that point, I'd built a sort of technical skill set from my time at EY in terms of finance, in terms of understanding, I guess, the major drivers of climate finance as well, and how the various mechanisms worked. So the projects we were investing in Asia, so we were focused on China, India, and various Southeast Asian countries. These are projects that typically produce clean energy, but also produce carbon credits. And these are carbon credits that then could be produced in Asia, but then sold into markets like in Europe, into the compliance markets, they're called. They are mechanisms that were basically kind of managed under the auspices of the UN, through the UN FFC, things like the Clean Development Mechanism, it was called. So the adaptation then that was required was going from this very corporate kind of UK setting, very technical, to working on originating projects, structuring them in an Asian context where you're dealing with very different cultures. So culturally, investing in and working in China is obviously very different to investing in and working in India, and very different to the various Southeast Asian countries as well. And I think the main commonality there was understanding for the first time the role that trust has in business and finance, and kind of building that capital with partners, with stakeholders. The kind of partners we're working with are owners of assets where we could basically build our clean energy projects. Now, this was before wind and solar had become really cheap, so we weren't focused on wind and solar. It was more things like landfill gas to energy projects, actually taking gas in many forms and capturing it to create energy. This is gas that otherwise would have been vented to the atmosphere or flared. So projects like coal mine methane projects in China, also kind of various biomass type projects, and also things like sustainable forestry in Indonesia, which was a fantastic opportunity to be exposed to those kind of sectors and technologies. But my overriding kind of recollection of that period is is how we would interact with the owners of the assets, building these kind of long-term relationships, lots of meetings in hotels, um, uh, uh, and also interacting. We talked earlier about kind of communities and these and clean energy investments, seeing how these investments played out within communities. So landfill gas to energy projects were a big focus of ours. We built a really big and successful landfill gas to energy project at the Bangkok landfill. We looked at other landfills like the main landfill just outside Jakarta. And I have to say that was an extraordinary experience, because we were then going to sites, and these landfill sites are extraordinary because in Asia, there are tens of thousands of people that live at these sites, and you make a living on basically picking through the rubbish and the waste to sell it. And you see the conditions that they live in is quite extraordinary. So that was very much an eye-opener. And again, that was probably the first time when I was sort of pulled out of just thinking of these investments in terms of spreadsheets and contracts to seeing, okay, this is reality. And we need to understand the human impact of what we're doing, as well as obviously build the relationships with the partners that we had in the regions to build the portfolios.
Yeah, I mean, that sounds like a really interesting time. And you're there, you finish up your work there, and then you relocate back to the UK, and you're probably thinking, what's next? So, and obviously Foresight, that's where we kind of come full circle, and you end up at Foresight. Do you want to maybe talk a bit about in the kind of early days, what attracted you to Foresight as an outfit?
Yeah, absolutely. So the firm I was working at then, the firm that was built by the guys I mentioned, by Assad and Richard, and I work with, the firm is called Syndicatum. And in around 2012, my wife and I just decided we wanted to go back to the UK just for family reasons. We wanted to be back around our extended family. We'd had our first two boys had been born in Singapore by this point. We've now got a third one as well, so we've got a full house. So we decided to relocate back to the UK. I knew of Foresight because Foresight was an early investor in Syndicatum, so I knew some of the Foresight guys. And when we came back to the UK, so in 2012, at that point, Foresight was very early in its infrastructure journey. Foresight as a firm was founded back in 1984 by a couple of gentlemen who had come from 3i, the UK private equity firm, and the executive chairman still today is Bernard Fairman. So Bernard, one of the two original founders. Bernard and Peter English built Foresight in the 1980s, the 1990s, primarily based on technology investing. So investing in new technologies and investing in private equity and structures, so into UK corporates. And it was in the kind of the late 2000s when Bernard first identified solar power as a technology that would be potentially disruptive in the energy space. And that was actually the genesis to the infrastructure program at Foresight. So when I joined, Foresight has just started making investments into solar and also into bioenergy. It was investing from capital it was raising from UK retail funds through various structures that were available in the UK at the time, kind of tax structures that individuals can benefit from and invest into renewables. That was a new world to me. I'd never worked with kind of retail capital. We built then the business, we built the track record around those technologies in the UK, in other European countries. We're investing in Spain and Italy in the kind of early stages of renewables build out. And I was also involved in building a business in the US as well. So we built a footprint in the US and learnt a lot actually investing there, some of the challenges of working with the US. But really that's the kind of journey that the firm and I have been on, is to go from there, when it was probably certainly less than 10 of us on the infrastructure side, investing in sector-specific funds, to where we are today, where we have over 190 people just dedicated to infrastructure and real assets, and investing in these two big themes of the energy transition and natural capital.
I think one of the things that people listening might be interested in, particularly anyone, again, in an established infrastructure firm or a similar outfit. So you've obviously stayed with Foresight for a while, and you've kind of navigated your way up the ranks. Obviously, you're working at a partner level now. What are some of the kind of qualities and characteristics that you have had to develop in order to see your career progress in that upward trajectory?
I think two I would pick out would be just general perseverance. And the second one then is kind of dealing with the difficult and the awkward stuff. And I'll explain what I mean by that. So perseverance, I think, in this world of investment management, especially in like private markets structures, it is actually all about perseverance, is what I've realized. So we talked earlier about how we raised FEEP, the Energy Transition Fund. And that took a lot of work. I mentioned that's partly because we were having to build the credentials of Foresight as an institutional manager. So I've mentioned that in the kind of the early 2010s, Foresight was known as managing retail capital. We hadn't yet established credentials in the institutional space. And whilst I had experience of raising institutional capital from syndicatum, it was the first time we'd done that as a Foresight firm. And we took a lot of knocks on the way. We had, a lot of working with investors for months and months. The way the diligence process works for private markets funds is that investors will take months diligencing you. It's often very hard to get feedback. The most common thing is you'll just suddenly stop hearing from an investor and you don't know where you stand. And you just got to keep going. You've got to keep going in a context where sometimes you are not getting that direct feedback. You don't know what you're doing wrong. We were doing things wrong, which we now know about. But you're not getting that feedback and you just got to keep smiling. And it can be really frustrating because you can get all the way down the path with an investor and they, for some reason, decide, oh, actually, we're not going to invest. And at that point, you just got to smile and carry on. So that is all about perseverance, sticking to your guns. You need people in the team who will stay in the trenches with you, that can act as a team. It's really important not to have egos as well, especially with fundraising, because often when as a group of you fundraising, there's kind of things around like who owns the relationship with the investor, who knows this kind of, you've got to work together. So no egos and perseverance. And then the other thing I mentioned was like dealing with the difficult stuff. That's just a general lesson I've learned, is that problems happen. You can see issues in relationships, whether if it's like, if you're an investor, it could be an issue with the management team you've invested in, a slight misalignment, where the easiest thing is often to just stick your head in the sand and avoid a difficult conversation. And that creates so many issues because it just builds up over time. So I've got to a point in my career where obviously, when you reach a certain time in your career, you're so busy, you don't have time. There's no time to deal with those situations or to waste time on them. So you just have to nip them in the bud. So so a lot of what I do now is actually just having the difficult conversations early. And that's definitely a lesson I've learned over time.
And has that shaped your approach to how you lead within Foresight and how you, I guess, lead others within the teams that you oversee and manage? Tell me a bit about, I guess, your leadership ethos would be really helpful.
Yeah, I think the way I would see myself would be as a facilitator. So my job is to make sure that the people are in the right positions. They're doing the right job. They know their job very clearly, and that they are reaching their best potential. I know there are different leadership styles. A style is to put people under maximum pressure and see how they perform. I have a different style, which is basically to try and help people build the foundations for themselves, such that they can be the best version of themselves. And I think, it's about, and I think part of that is encouraging a culture where people will talk about their own strengths and limitations, because then we can all focus on how do we make ourselves better. In terms of like having the difficult conversations, especially as British people, we tend to shy away from giving each other feedback. When you're in an environment when it's difficult and you don't have the time to not have the difficult conversations, you just have to have them. You have to talk to people about kind of where they're doing well, but also frame a conversation as, well, how are we going to make you the best version of yourself? And not just, again, doing the easy thing, which is to let people continue making the same mistakes they're doing, and the kind of classic, again, very British response or approach of basically just talking about them behind their back, and kind of moaning, rather than actually addressing the issue. So So I do think there's, I do think within that kind of culture of facilitation, helping people achieve the best thing they can, be the best version of themselves. There is obviously a key element of that is giving clear feedback. And I guess the last point is just trying to lead like through example. I think I push myself quite hard. I think one thing I've learned is that I probably go much more easy on other people than I do on myself. And there's a learning point there that actually that is not very effective. That you need to be, for people to achieve excellence, you do need to give them the right feedback, and you've got to kind of bring them along. So I feel like that's another lesson that I've learned.
What does that, how does that translate to, I guess, the mindset of the people who are coming into that environment and want to learn from someone like you? And I mean, I guess the thing that jumps out at me is you need to be willing to take constructive feedback. You need to be willing to actually be kind of molded and shaped and have some of the rough edges chipped off. And it probably goes back to kind of the perseverance that you mentioned and being willing to receive those kind of difficult conversations. Curious to hear just what you see as kind of defining the future generation of kind of finance leaders in terms of mindset and skills.
Yeah. I think if I could pick one thing in terms of the future generation would be, actually, I think humility will be probably the most important characteristic. And what I mean by that is the world obviously is changing very quickly. The world will be very different in years and decades to come. And I think the people that succeed will be the people that recognize that can live with that uncertainty and have the humility to say, well, actually, we don't know where things are going. What we can do is we can build the right kind of skill sets to navigate this. When I think about my kids, for example, my boys, when the world they're going to be growing up into will be fundamentally different in terms of the kind of skill sets that they can rely on to earn a living. AI is changing things. It's changing things in the white collar world in the way that automation has changed things in the blue collar world previously. So humility is important because if you're humble, you're constantly learning. Also, it means you can get on with people. I think that, as we move into a world where some of the kind of harder technical skill sets, whether it be the technical skill sets of finance or of law, to some extent, they're becoming less valuable because the robots can do that now. And so the ability to get on with people and to build teams and to build effective networks will become just more important over time, along with that kind of ability to have a sense that the world is changing quickly and how do you live with that uncertainty and adapt to it.
Absolutely. And from my perspective, I think that's actually one of the biggest challenges of maybe a generation who are coming into the workforce who are maybe less used to having to have some of those kind of face-to-face interactions. And I think we'll see a big shift in how they approach work in life and some of the, I guess, the challenges that they're going to face and the lessons that they have to learn. But Dan, I want to finish up on something which I know is very close to your heart, and it's the reason that I first became aware of you, and that's because you are quite regular in terms of writing. And publishing your thoughts out there on both. Have you got a Substack, is it? And also, obviously, that makes its way through to LinkedIn. But you talk a lot about climate investing, emerging markets, and also seem to just have a very broad and rounded interest in creating a sustainable future. What is it that motivates you to write?
I think there's two things. First of all, is just a sense of I do want to be doing something that I feel is contributing. I do want to feel that I have a purpose, and that goes back to well over 20 years now, to that kind of moment in 2003 when I sort of thought that through. So that's the first element of it. I come from a family, my parents have always been like politically active. They were students in the 1960s, and I probably had that kind of infused in me from a young age that it is important in life to contribute beyond just the basics of earning money, whatever it might be. I think the second point is it's just in my nature. I think about these things, I want to process them, and I find the writing, the discipline of writing, it's just a very good way of doing that. So what I'd write about is actually the kind of questions I'm grappling with, and they're all the topics are all based around this kind of central theme, which is like, how do we as a society navigate the coming decades, the next 100 years, in a way in which A, we're still here in 100 years' time, and B, we've got a functioning and flourishing society where as individuals we can live happy lives. And I think, I'd look at it from the two perspectives. It's like, well, what do we need for that system and that society to work? And then secondly, just as an individual, how do you live in this kind of context? How do you live in this world and live a flourishing life?
I think the concept of telling stories and the idea of narrative is actually so fundamental to who we are as people. I've been thinking quite a lot about it recently as well, particularly how we position ourselves within stories and how that then allows us to kind of see ourselves as part of a broader society and where we're going to, where we've come from. Do you think that narrative and storytelling capability helps you when it comes to maybe your work in life, framing some of the reasons why maybe Foresight are moving into certain areas, and how does that impact the way that you can interact with people, having that ability to tell good stories?
I think it's fundamental, and that is an overlooked skill, actually. I would say, even in like fundraising, and I'll give an example of that. So when we're fundraising as an investment manager, a classic question you get from investors is, how do you originate assets? What's your edge? Because there are loads of other fund managers. There's only a certain number of wind farms and batteries and pumped hydro projects. So how do you originate them? And the first part of our answer will be, well, we have a team of 190 people. And in that, there's 50 people who are on the investment side. And we've got offices in London and Melbourne and Sydney and Madrid and Rome. And so we have a big team. We've got a long track record and all of that. But the second, a more powerful way to answer the question is with actual stories. So a story we'll often tell is actually going back to the Swedish wind farm. So I mentioned we had this investment in Skarf Dawson, which is our first investment. And we had the challenges of building it, and it's now fully operational, and it's fantastic to see. So we were on a site visit there a couple of years ago, and it was in May of that particular year. And I don't recall whether it was 2022 or 2023, one of those 2 years. So in May, the construction was kind of halfway through at that point. Sweden in May is lovely. It's sunny. So we're quite far north at this point. You're basically surrounded by wilderness. There's forests, incredible creatures there are reindeer, moose, wolverines in the trees, lots of snakes there as well, extraordinarily. But we were on their particular site visit, going up the wind turbines in May, and we got a phone call from the developer, which we'd bought the wind farm off, a group called Arise, who are a very well-established wind farm developer in Sweden, and we still work with them. So after we acquired the asset, we still work with them. They perform lots of services in terms of overseeing the construction and the operations of the wind farm. They had a sister project of this one, Skarf Dawson, just up the road, a project called Chevallen, which is an even bigger project. It was slightly, and we're still in the kind of pre-construction phase. And they were looking to sell the project. They had a buyer, but they had a ticking clock in that they had to get the sale agreed by a particular date, which is around kind of mid-August of that year. And that was because they had a contract to sue of the turbine supply agreement. And beyond that, if they missed that date, they'd have to renegotiate it, and the costs would have gone up massively, because this was during the kind of supply chain crunch when costs were going up rapidly. So they were a bit nervous about the kind of the buyer they had. And they said, because we know you, Foresight, we know your track record, is it worth us having a conversation? So myself and Richard, the other fund manager, said yes, absolutely. So we got on the plane the next day, and it's a tiny little 9-seater you get from Sveg down to Stockholm. On the plane down to Stockholm the next morning, and over a coffee in probably 15 minutes, we thrashed out how a deal could possibly work. And then we ended up acquiring that one as well. So Chevallen, which is now well through its construction period, we were just there in January actually, and is another fantastic asset. The point being that we wouldn't have acquired that, we wouldn't have been successful had we not built that trust and that rapport with the partner. The reason I'm telling that is because that's in a real story that is like tangible, and I think can change people's perspectives in a way that just simply saying that we've got 50 investment professionals doesn't.
Yeah, absolutely. So Dan, if people are interested out in the industry in learning more about what Foresight do, in maybe getting in touch with you, reading some of your articles. I know you're on LinkedIn, or even thinking about career opportunities that might pop up with Foresight in the future, what's the best thing for them to do? How would they get in touch?
Yeah, well, you can contact us. Obviously, you can have a look at our website. There are videos, case studies of our assets there, which I'd really recommend watching because it's great to see the scale of these things and to see them kind of real. Absolutely, people can contact me as well via LinkedIn. You can look me up there. I do write on Substack, as you mentioned, so people can go to the overview papers, which is my Substack account. I'm quite early in my Substack journey, so I'm still kind of learning the ropes a bit, but I really enjoy that. And just feel free to reach out to us or just to kind of stand in contact at Foresight. And we're always delighted to speak with people, especially people with a passion for the industry who want to look at careers in the space.
Great. And we'll link all of those details in the show notes so people can go on the usual platforms and find them. But Dan, it's been an absolute pleasure. Great to get to know you a bit better. Thanks for coming on the podcast. We hope you've enjoyed it and we look forward to speaking with you again next time.